Hello everyone, Restructuring in Poland 101. What are the basic do's and basic don'ts? My name is Michał. I am a Polish licensed tax advisor and I provide accounting, cost calculation, tax compliance and tax advisory services for small and medium-sized enterprises in Poland. In this video, I will show you, based on a very simple example of a restructuring aiming at establishment of a holding structure, what are the three basic moves that you could apply in order to get to such holding structure. As you will see from this video, out of the three, only one solution is really optimal and should be proceeded with, and the other two may be very expensive. Okay, so without further ado, let's get into it.
We even get to such structure in the first place from having only a operating activity spółka z o.o. to having a structure with a holding company. From my point of view, when I read the advanced ruling, I understand out of it, although not all of this is mentioned in the advanced ruling, I understand that at the beginning, this taxable person, first of all, a part of the already existing operating activity spółka z o.o., this person created additionally another company, which in the future should take over the role of the holding company. And this taxable person has considered several scenarios of moving the shares of operating activity spółka z o.o. to holding spółka z o.o., out of which one scenario was chosen. And before I describe what scenario was exactly chosen, what could potentially other scenarios be? Of course, there are in reality, depending on the exact background, there will be many different ways of how such holding structure can be created. But when it comes to some few fundamental possible scenarios, we could, for example, consider selling the shares of operating spółka activity spółka z o.o. to holding spółka z o.o. So this taxable person concludes an agreement with holding spółka z o.o. and according to this agreement, this natural person, the taxable person, sells the shares in operating activity spółka z o.o. to holding spółka z o.o. But we have also take into consideration that usually in such cases, the operating activity spółka z o.o. has already been conducting business for years or even decades. And most probably the value of shares, the market value of shares in the operating activity spółka z o.o. is very significant. On the other hand, usually the shares in such companies were obtained by taxable persons, by the natural persons, at the moment of establishing such operating activity spółka z o.o. through injecting the funding capital only at the very minimal lowest value. When you additionally also take into consideration that according to the Polish personal income tax provisions, if the sales price for a good or a share is set by a taxable person at the level which differs from the market level of a price for such good or a commodity or a share, then the tax authorities are entitled to increase this price set in the agreement to the market level. As a consequence, in case of a sale of shares in an operating activity spółka z o.o., assuming that these shares were indeed valuable and also assuming that this taxable person obtained the shares in operating activity spółka z o.o. while creating this company and injecting only the funding capital at minimal value or some low value, then the sale of shares in operating activity spółka z o.o. to holding spółka z o.o. would result in a very high taxable income, which would be subject to 19% personal income tax. And therefore, this alternative was for this person most probably completely not acceptable Another solution of creating the holding structure would be to perform a in-kind contribution of shares in operating activity spółka z o.o. to the holding spółka z o.o. We can call this contribution in kind also as a unqualified share-by-share exchange. I will explain in a minute what I mean by unqualified share-for-share exchange when I describe to you another alternative, namely the qualified share-for-share exchange. So how would this contribution in kind / unqualified share-for-share exchange look like? The natural person would contribute in kind the shares in operating activity spółka z o.o. to holding spółka z o.o., as a result of which the holding spółka z o.o. becomes the owner of shares in operating activity spółka z o.o. And for the shares in operating activity spółka z o.o., holding spółka z o.o. issues another additional shares to the natural person. However, as a result of proceeding with this solution, also similarly as in case of sale of shares, taxable income would arise for both the taxable person as well as the holding. And for both the taxable person and the holding, this taxable income would be equal to the market value of shares in operating activity spółka z o.o., namely the shares that were in kind contributed to holding spółka z o.o. So this is even a more devastating solution. As a result of that, this taxable person doesn't also want to proceed with the second alternative, namely with the contribution in kind / with the unqualified share-for-share exchange. What this taxable person chooses instead is a so-called qualified share-for-share exchange, which is income tax exempt both for the shareholder, for this taxable person, as well as for the holding spółka z o.o., which is the company acquiring the shares. In principle, this qualified share-for-share exchange will look like a standard contribution in kind of shares. However, several additional conditions have to be met in order to treat such qualified share-for-share exchange, which is personal income tax and corporate income tax neutral. Some of these conditions, but not all of them, are, for example, that in exchange for the shares in operating activity spółka z o.o., the holding company has to issue new shares to the shareholder or issue new shares and additionally pay an amount in cash which does not exceed 10% of the holding spółka z o.o.'s nominal value of shares. Additionally, as a result of the whole transaction of share-for-share exchange, holding spółka z o.o. has to obtain the absolute majority in the voting rights in the operating activity spółka z o.o. And in order to treat this transaction as tax neutral, it has to be performed out of justified economical reasons other than tax avoidance. And this last condition is an example for the so-called small special anti-avoidance, anti-abuse rule in the Polish tax provision, which exists parallelly to the general anti-avoidance, anti-abuse regulation defined in the Polish tax ordinance.
Okay, this is all what I had to share with you in this video. Please remember that all such restructuring cases in Poland require an individual in-depth tax assessment in order to determine the optimal way to proceed. But still, nevertheless, I hope that with this video I gave you some basic understanding and basic information on the solutions that are available in Poland. I wish you a beautiful rest of the day and see you next time. Bye!